Hello, everybody, and welcome. As we like to do every week, we like to take a look at the past week's market activity and then, of course, bounce around the market and look for something to trade. Well, obviously, part of last week was a holiday, but that didn't stop the market for the last 2 weeks. You can see essentially it's been going up for the last 2 weeks, and because of that, volatility is starting to drop. If we go to the NASDAQ, of course, it's always a very similar picture, but you see it didn't hit the highs the S&P did. If we go back to the S&Ps, you can see the S&Ps are at all-time highs. NASDAQ is just below, meeting up with all-time highs. And of course, the Russell is also on a different kind of trajectory, also near its all-time highs. So a little bit kind of outperforming the other ones, I guess you would say. But again, low volatility all the way around because the indices have been shooting up for the last couple of weeks. So what are we going to trade today? Well, let's go over to Tesla because one, earnings are long gone and they're over with. It's been on a huge tear ever since earnings, and also volatility is still pretty decent. You can see whenever I look at these big spikes, for the most part, they're generally around earnings. So that's earnings. This is kind of just before earnings. This one was just during this huge run up, and this one was just kind of after earnings. But except for these big spikes, let's say around earnings, this is still decent volatility. I mean, in the market where volatility is dropping, 44 is still a pretty good number. Obviously, we always want to go higher the better, but in this case, we look around the market, indices are kind of going to all-time highs, volatility is dropping all over the marketplace. We got to go into individual stocks and look for a little bit higher volatility, and 44 is still pretty good in this market. So let's make a trade in Tesla. So we're going to go over to the trade page. We're going to go right here to the 47-day monthlies, which tomorrow will be 46, which is absolutely perfect for us, right in our wheelhouse. The price now is 345. So I've already set this up for us. If you see, because volatility is pretty high, you can see we can get pretty far away. And that's what happens with volatility. The more volatile, the farther apart our strike prices can be from the stock price. In this case, we go $55 up, $55 down, and these are $5 wide strikes, so we're creating a $5 wide iron condor. And what we're looking to collect here is $1.65 or more. And just real quick, how do I get that? Well, we're always looking for a minimum of 33 cents. I'm not sure why it froze here. Let's try that again. We're always looking for a minimum of 33 cents per $1 width. These are $5 wide, right? 400 to 405 is $5. 290 to 285 is $5. So if we multiply that times the 33 cents, you see we want a minimum price of 165. That's the minimum we'll accept for this trade. And you can see we're above that. We're at 172. So this is a totally valid trade. So tomorrow, if everything stays the same, we're here. We're going to go $55 up and down, create a $5 wide iron condor, and as long as we're collecting at least 165 or more, that will be our trade in Tesla for tomorrow. And happy holidays. We just went through some. We're coming to some more, so enjoy the holiday season, everybody. Take care.